Today, I'm real excited. I have Arlena Sefiani on the call, and Arlena is actually kind of the back end of our short sale system. She helps a couple of our top agents in our company with short sales. And Arlena, let me just get right into it. But first, I just want to say that we're going to give you a lot of valuable information here today. So if you like this video, certainly hit the like button and hit the subscribe button as we talk about all things possible in Florida real estate. And I want to just bring the best people that I know of. And Arlena, you're one of those people. You know your craft really well. So to introduce you a little bit, tell me, who is Arlena? What do you do?
Sure. Hi, Troy. How you doing?
I'm good.
All right. Yeah, my name is Arlena Sefiani, and I'm a short sale negotiator. So I've been doing this for many, many years. I used to work for major banks as a underwriter and also management team, specifically for the short sale, loss mitigation, liquidation department. So I know the ins and outs of most banks, how they process short sales, how short sales work in the banking and on the other side. Then I decided to leave the banking industry and I became registered with different states as a short sale negotiator. And some of the states that don't require a registration as a short sale negotiator, I collaborate with different attorney offices. I collaborate with about 4 attorney offices to negotiate short sales all 50 states. So basically, yeah, that's my background.
Well, that's quite extensive. I mean, obviously you're a specialist. If somebody has a short sale, you're one to take care of the back end. Now that's a real diligent process. Is that correct?
Very diligent. It's very specific. You have to approach it in a very specific way. Once I have a short sale file, then I go straight to my contacts inside those lenders. Different lenders, I have different VPs, underwriters, CEO offices that I work with directly. I just skip, the customer service or the negotiator with the bank. I skip all that and I go to the decision makers straight to see, what they can do for me, because they used to work with me most of the time. We used to work together. So yeah, it is very diligent process. It's very specific. You just have to know how to approach each lien holder to make sure that everybody's on the same page. So I not only fight for, let's say the homeowner becomes my client once they sign my documents, once they sign my agreement, but I not only fight for my client who's the homeowner, I fight for the agents as well. I make sure that their commissions get paid, make sure that the bank doesn't reduce their commission. So I negotiate on that. I negotiate on escrow fees, on title fees, on all that. So basically I negotiate for everybody. It's not only for the homeowner, it's not only for the buyer, it's for the agents, for escrow companies, for title, for even attorneys. If my homeowner has a bankruptcy attorney, they want to get their fee paid, I negotiate on that. So my fee gets paid by either the bank or the buyer has to pay my fee. So the agent never shares their commission with me. Wow, that's not allowed. I would never allow that. Yeah.
I want to stop that idea because, I think that's a really important part. When you think about a seller that's in financial distress and they need service like yours, it doesn't cost them anything to have your service taken care of.
No, I make sure that the bank pays everything for the seller. So the bank is going to basically pay the commissions, their escrow fees, their everything. I also make sure that the homeowner might walk out with an incentive. So I ask the bank to see if they are willing to pay the seller some relocation incentive, some short sale incentive. And the reason that the bank is willing to pay that is because, the seller is doing a good deed by not letting the property go to foreclosure, because that costs the banks a lot of money and process in order for it to go to foreclosure. So because the seller is willing to short sell their property and not let it go to foreclosure, the bank awards them with some little incentive, or could be a high amount. I mean, I've gotten anywhere from $3,000 to $25,000 to even $30,000 for a seller. Wow. Through the short sale process. Yeah.
No, that's really amazing.
For everyone.
No, that's amazing. And I think you probably have an insight. So when a client comes to you and they actually, let me just clarify, you're not a licensed real estate agent, correct?
I am not. I am not. I only do short sale negotiations for different real estate agencies.
So the secret is that you're on our team. I mean, you're a resource for us to help us facilitate this as a licensed real estate broker agent. You work with a couple of our top agents. You're the person that really is in the trenches helping us get short sales approved with your insight.
Definitely. Yes.
Okay, great. So you're not a competing agent in our regard, but you're a resource, and your resource is free of charge to a seller that needs somebody on their side.
Definitely, definitely. Now, there are situations where, the listing agent could go to a property and they assess the property and they get a title report and there's a bunch of liens recorded against the property. Now, the first lender could not be short, but there are other liens that are recorded that the proceeds of the sale cannot cover. That becomes a short sale situation again. That doesn't mean that you give up on that property because you can't cover those fees. I can negotiate those. I mean, I negotiate mortgages, HOAs, IRS, credit card liens. Credit cards can record, judgment liens against the properties. So I negotiate all that. I make sure that the sale goes through and the transaction closes successfully for everybody.
That's fantastic. Now, there's a lot of, I think, misconception right now. We're probably the hottest real estate market I've ever seen, where properties are selling within minutes, actually, in multiple offers, and we're seeing such a huge appreciation, and sellers have equity. So I think there's probably a myth that we're not seeing foreclosures. Can you kind of dispel that myth? Are you busy right now?
No, actually, I can definitely explain that. So because of the pandemic, because of COVID-19, a lot of lenders started giving homeowners forbearances. They gave them, and what forbearance means is that you basically don't have to make your payments for the next 3 months or 6 months, and this is not going to be recorded against your credit. And because of the pandemic, people didn't have money. They were not working for them to pay it. But they extended that 3 months to 6 months, to another 3 months, to another 3 months. We are coming to an end of that forbearance period at this point because moratoriums are basically done, expired, and most lenders are approaching to filing lease pendants against the properties to move forward with a foreclosure. Because if the homeowner owes, let's say, 1.5 years of payments. So what happens to those payments? It doesn't just go away. The bank wants that money. You either have to reinstate it, which means that you pay that full balance off, or you do a repayment plan, which you have to qualify for. They have to know that you're working to basically be approved for a repayment plan. And what that is they extend your payments and they include it into your current payments. Your payments increase each month until you pay that amount off. Or you do a loan modification to keep the property. Again, you have to show them income. You have to show some type of an income for them to approve you for a loan modification. But if you don't, if you're not working and you owe the bank that much, they will move forward with a foreclosure on your property. And that's when short sales are going to come around. That's where we're predicting. I have a lot of real estate agencies contacting me to start doing seminars for their agents, for me to teach them, the new agents, how to process short sales, how to recognize short sales, what to do in that situation. So I'm basically preparing to travel a lot in the recent months. So we're there. Everybody's predicting that it's going to be coming very, very soon. Short sales are going to be coming around very, very soon. So
yeah, well, there's actually kind of a divide, isn't there, between federally backed mortgages and mortgages that are not federally backed?
Yes.
Can you explain what the differences are and how that affects a short sale between a federally backed mortgage that's been protected through forbearance and one that hasn't, like a conventional mortgage?
Yeah, so conventional mortgages, we're still kind of processing foreclosures throughout even this pandemic. I've had a lot of clients that I had to save their homes and do a short sale for them, even through the pandemic, because, the conventional loans, they don't have to abide by any government loans. They're private lenders, basically. They lend you that money. They want their money back, and they don't have to abide any of those moratorium laws or anything. Now, federally backed up loans, yes, so they have to abide, like FHA, VA, USDA, all those loans. They stopped the foreclosure, again, gave people a lot of forbearances, but again, they want to collect their money at this point. So once that's over, you still have to apply for either a repayment plan, loan modification. If you can't qualify for any of that, it's your next option if it's a short sale situation. So yeah.
Excellent. Now, you mentioned the idea that sometimes an owner may think that they have equity in their property. It's gone up so much in value over the last year because our market's so strong. But ideally, as these moratoriums come along or start ending here, you mentioned that an owner may be a year behind their payments. They're going to have to make that up on their loan. What if they have other liens, like they owe the IRS money or they owe credit cards? That's tacked on to what they have to pay off to sell their property. And now they're being forced to kind of pay off their debt. So even if an owner appears to have equity, have you ever seen a situation where the owner feels, hey, I'm okay, and then when you do a payoff, you see something that looks a lot worse?
Yep, that's exactly. And I've had a lot of situations like that where the agents call me, they said, oh, we thought this was an equity sale. We thought that this owner is going to walk away with this amount of money, but then we pulled the title report of the property and it shows 4 IRS liens or 3 credit cards. What do we do now? So that's when it becomes, again, a short sale situation. So you are basically shorting the IRS, not particularly the first lender, but you are shorting the IRS at that point. That's when, they call me, I step in and I say, okay, well, this is the situation. So I fill out a couple of, applications for the IRS, and you have to approach the IRS in a very particular way. It's not just, submit a bunch of documents, they'll approve it right away. No, there is a specific department, specific way of approaching the IRS, and they have an advisory unit that you have to contact. Each state has a different advisory unit. So once I know that's the situation, I collect the documents from the agents or from the escrow company, from the title company. I put a package together to make sure that the IRS understands the situation. Okay, this is the amount that basically is going to you, or I will ask the IRS to fully release it with 0 amount going to them. And I've done that many, many times. I mean, I talk to IRS almost every day. So yeah, I've released IRS liens $4 million, $2 million, even $10,000. There were situations where we did contribute something to IRS. If there is amount left that we have to, where it has to go to IRS because they're the lien holder, they're the next lien holder. If there is credit cards after that, then they have to fully release their lien because I'm not going to contribute anything to them because IRS will not allow us contribute anything to credit cards unless they are being paid, whatever the amount is left. So that's when it becomes a short sale situation. Yeah.
So let me understand, when you negotiate with the IRS, is it possible that you could eliminate that lien to where the owner does not owe the IRS any further monies?
It depends on the advisory unit and the state. So different states allow me to, to release the full amount of the judgment against the owner and also the lien against the property. Most states don't allow that. They just release the lien. And what happens is if that's the situation, then what I do is I talk to the homeowner. I say, don't lose hope because I'm still working with you. Even though short sale is done, I still help you after that. So what I do, there is an application that we fill out with IRS that we want to do a settlement with you. So let's say if he owes $50,000, we can offer the IRS maybe $3,000 or $4,000. We can start negotiating from there and see where we end up, paying IRS some settlement amount and then get that discharge from the homeowner as well. So even if the IRS doesn't release them, I still work with them after that to make sure that they're fully, released from IRS.
Well, that's incredible. So if someone owes a substantial amount to the IRS and it's above and beyond the equity in their property, through the short sale and through your process, they can walk away from the over-encumbered debt plus potentially settle with the IRS.
Yes, absolutely. So there's a lot of benefits. I mean, it's a win-win situation. A lot of my clients, homeowners, they think that just letting the property go to foreclosure is the best idea. And it's not. Absolutely, it's not, because my company used to do credit repair, and I know what foreclosure does to your credit. I have seen my clients, when they let the property go to foreclosure, then they call me, this is the situation, my bank accounts got closed, my insurance went up, the premiums, health insurance, car insurance. So it's credit cards can get closed. If you let the property go to foreclosure, then what happens is you want to go rent another place. You have to leave that property anyways. Foreclosure is not going to help you rent another place. So that's another kind of a situation that I highly, highly recommend, homeowners not to let the property go to foreclosure. There's so many options, and you can walk away with money if you go through a short sale process. So why let the bank have it? Bank doesn't even want your property, to be honest with you. I know because I used to be in that department. When a property was foreclosed on, we used to hire a preservation team. We used to hire different companies to make sure the property is preserved, pay the attorney offices, pay this. They don't want that. They want to do a short sale. They want to move forward and just let it go to a new buyer. So yeah.
That's really helpful. So I mean, on that vibe, I mean, you have a good hold on the banks. And I mean, you have, with your communication with the banks, you're certainly able to help facilitate that process.
100%. And that's basically my job. That's why I went into this business, is to help people. It's a joy for me to see, a homeowner walk away with, some money and not have to worry and get unhooked from that property, because they've been going through a lot with that. So yes, I enjoy my job.
Well, it's certainly a gratifying situation. Somebody that's in financial stress, they owe the IRS money, they have, they're going all these things. And if they do nothing, and they let the bank take it back, now their situation can get worse, because they're going to have a problem finding housing with the foreclosure against their credit.
Absolutely. Yeah, a lot of things can affect you when you go to foreclosure. A lot of things. I mean, I just named a few. There's many other things that could affect you. You never know down the line, because foreclosure could get recorded on your credit 7 to 10 years. I've seen 7 years, and then I've seen 10 years that it's still being recorded. Now, within that 7 years, let's say an opportunity comes on your way 3 years down the line, and you have to borrow money to make a business work. That's going to affect you. But if you have a short sale, it doesn't even get recorded as a short sale. It just says paid less amount owed, and that's it. And it could be lots of things. So it could be a settlement, it could be a short sale. A lot of people don't question that, a lot of companies. But if you have a foreclosure, it says foreclosure on your credit. So
wow, that's quite substantial. So what other liens are we talking about? We have the IRS lien, credit card liens. What other liens do you negotiate with for us homeowners?
So any lien that basically is recorded against a property. So if let's say a homeowner has a lot of credit cards and they do record a lien against a property, and this is very interesting because an unsecured debt becomes a secured debt, and that has always been kind of my fight with these credit card companies, is when you're an unsecured debt and you're charging 29 to 30%, interest rate, you're not supposed to be secured. You're not supposed to record a, lien against a property, but they do. And credit card liens usually have an expiration date. It doesn't last long time. It's 10 years, then it could be maybe 2 to 5 years, depending on the state. Now, IRS gets recorded for a long time unless the homeowner either pays off or either sells the property and pays off, or we negotiate a short sale for them and that lien gets released. Mortgage liens, HOA liens, those HOA and property taxes take over before any other lien. They're a priority. So HOA could potentially foreclose on your property and they don't even have to pay anything to anybody. So they could, foreclose and take over the property and sell it again. So it's something that happens.
Well, that's really alarming. So, I mean, if a homeowner, even if they own their property free and clear, but they're having problems with their HOA, their homeowners association, they can foreclose and take ownership of their property?
Absolutely.
Have you seen situations like that happen?
I have seen situations like that, yes, where they contacted me. They said, well, this is the situation. I have a foreclosure sale date from HOA and I don't know why. I don't owe anybody anything. I said, well, you owe HOA. They can actually foreclose and take your home. So I had to negotiate with HOA and actually, stop the sale about 4 days before the sale date and release that, HOA lien. We did a settlement with them where the homeowner paid and they were good again with HOA. So they kept the property. So
that's interesting. So let's think about all the liens that could be on a property. We're talking about the IRS, credit card, homeowners association, bank owned liens, second mortgages, lines of credit. What would you say is the hardest one down to probably some of the easier ones to negotiate with? What would be the hardest liens to negotiate?
The hardest liens, I would say HOA could be very tough to negotiate with. So because they know they have priority over everyone. They don't have to negotiate with you. What's in it for them, basically. Basically, what I have to do is show them what's in it for them to negotiate with us. And most of the time, what happens if you have a first mortgage, your first mortgage, if they know that you owe the IRS, they will pay off that HOA. because they're afraid that they're going to lose, just like property taxes. They usually pay your property taxes to make sure that they don't foreclose on the property. So that's, I mean, HOA is probably number one. Then it's the first lender who they know that. Usually it's the position holders. If you're a higher position, it's a little bit tougher to negotiate than when, you know, you're a credit card or, you know, IRS, to be honest with you, is not that hard. I mean, from my experience, you know, you just have to submit the right information. You just have to put the right information on your application. It's a specific verbiage that I use in order to go through the process as fast as possible. But yeah, HOA, then first lender, then the second lender who, you know, doesn't have much say, but still, they're a lien holder. They lend you money. So, yeah.
Wow, that's really important just to understand that. So what happens when somebody comes to you and says, look, I don't know what kind of problems I'm in. I haven't been paying my bills for the past year. I have the IRS. I have no idea how much I owe all my creditors in the first and the second, and I'm not paying it on my house in foreclosure. I mean, how do you start? What's the first process to kind of actually know how to solve this problem?
Sure. So if a homeowner comes to me and says, okay, this is the situation I'm in, then what I do is I have a specific escrow company, title company that I go to. I'm going to order a title report on this property. I need to see exactly what's going on. Do these actually lien holders have a lien against the property? They can actually foreclose on this, because I want to protect my client from foreclosure, first and most of all. And then I have an authorization form from them where I send it to their lenders and see exactly what's going on. Like, what's the feel? Is the bank actually trying to foreclose, or are they willing to work with us? Then, you know, then we have a listing agent. I say, okay, do you want to keep the property or do you want to sell it? At this point, what I'm looking at, if you sell it, it's going to be much better for you, because your bank is trying to foreclose on you and they're not willing to negotiate, and you cannot afford this property. You know, if they have a job and they can afford it, I suggest, you know, I was an underwriter and I can quickly underwrite and see if they qualify for a loan modification. If they can't, my next suggestion would be to sell it. I say, you know what, I'm going to be recommending this and this agent for you to list the property. These are the agents that I work very closely with. So let's go ahead and sell the property, because that's your benefit. So I basically show them what's in it for them. What's the benefit for them to get out of that situation.
Well, that's fantastic. So, I mean, ideally from the very start, you can look at their financial situation, see all their liens, and then you kind of know how to put things in order, what's possible, and what are things that are going to be problematic from that point.
Exactly. Yeah, I could tell exactly from once a title report comes in, once I assess their financial situation, I could tell, okay, you are not going to qualify for anything on this property, or you will qualify, you might qualify for a loan modification. I suggest go ahead and do the loan modification. If you don't qualify for some reason, your investor doesn't approve it, or there's lots of reasons why an investor might not approve it, because of the amounts of, you know, past due you have. You know, FHA usually does not like when you submit anything when it's past 48 months. And I have to negotiate even that, you know, a short sale is coming. Can you negotiate? It's been 60 months. That's okay. My client went through this and that. So yeah, different situations, but I have to kind of assess the whole situation and give them the best advice that I can. So this is your way, basically.
That's excellent. Now, I just want to kind of go back to the idea that you had mentioned you had negotiated a lien with the IRS that was millions of dollars, and you got that situation resolved so the property could sell.
Yep. Yes.
That's
so what I did is basically I contacted, it was a first lender short, second lender short. That house actually had about 17 liens against the property. And I was dealing with about 10 attorneys, 2 IRS advisory units, and 2 lien holders. So yes, it was a tough situation, but yeah, I had to convince the IRS that you have to release this lien. So.
Well, those are the most rewarding, the ones that were really a challenge.
I've had some tough ones, trust me.
And then the other ones are a piece of cake from that point on. But
oh yeah.
And you're really dealing with people that have a very hard part of their life. I mean, we all have storms of good times and bad times. You know, a financial crisis, as I talked, I mean, bad things happen to good people.
100%.
And there's a point where it's just hard to think straight when you're in that emotional state of, how do I get out of this? Or, you know, it's easier just to do nothing and forget about it and let the world take care of itself. But ultimately, that's probably the worst thing they can do.
100%, 100%. And I always tell them, I said, it doesn't cost you anything for you to ask for help. Anytime. I mean, I work many hours because I do all over, US, I live in Florida, but sometimes I stay awake until 11, 12 o'clock at night to talk to Hawaii clients. So there's always help out there. You just have to ask. You just have to call and ask, and we'll be there. We'll hold your hand throughout. You will know that you're not alone. Basically, somebody is basically trying to protect you from everything. So.
Well, I know your work ethic just from the idea that it is Sunday at 2 o'clock right now that we're recording. And you said,
I never stop.
I'm going to be working too. That's perfect. That's my quiet day to talk, because the rest of the day it's crazy. But it'll give me a chance to collaborate a little bit. So that speaks volumes for your work ethic and helping people. And I think it resonates that you really are doing this to help other people.
Definitely, it's a joy for me to help people.
And obviously, you've seen a lot of sad stories out there. Yeah. And tell me some things that maybe were sad that turned out really good. I mean, some things that you can kind of extrapolate from that idea.
So, I mean, just recently, I had a short sale. She was a 90-year-old woman. She was going through a foreclosure with her bank. She hired an agent to try to sell the property. They couldn't stop the sale. They called me through a referral through another agent. They called me. They said, listen, this is the situation. We can't stop the sale. We don't know what to do. So, I stepped in. I collected most of the documents. I submitted to the bank. They're refusing to review a short sale, completely refusing. Sale that is closed, we're not going to review the short sale. We're going to decline it. So what I had to do in that case, I had to take a different route. So I wrote a letter to my contact and their CEO office. I said, listen, this is a 90-year-old woman. You guys are trying to foreclose on a woman and, basically kick her out of her house through a pandemic this is the situation right now. And it's not a good situation for you guys. It doesn't look very good for you. I said, if I hire media, what do you think they're going to do with this story? So that turned their heads. that turned things around very quickly.
Good.
So we end up saving her home. We end up, not saving her home, but we end up saving the home to be sold to a new buyer. Actually, the buyer was so nice that he actually paid her relocation incentive. The bank refused to pay. They actually paid her. They said, you know what, we're going to help you out with some incentive for you to move out. So it was a win-win situation at that moment. But it's not a good, it doesn't look good for the bank when they want to foreclose on a 90-year-old woman in a pandemic. That doesn't look good.
And you were there to kind of let the bank know that situation, that you had some resources after she had been told that, no, your door is shut, this is the answer. And Arlena steps in and we get a different result.
It's sad. It's sad. You just have to show them that, listen, this is not a good situation for you, wherever that bank was, so we basically end up saving, the house from going to foreclosure. So she was very happy.
Arlena, I really value our time today, and you've given us a lot of good information. I got a lot of good resources. I'm going to leave your contact information below on this YouTube video. And again, I want to stress that we're here to be of service to you. We're providing information. I do feel we're coming into a very cloudy time with our economy, and a lot of people may not see the clouds yet, but they're certainly out there. Wouldn't you agree? I mean, with moratoriums and the eviction crisis about to hit, actually within a week or so now, is going to be the first start of all the things starting to come down, that we need people like you, Arlena, out there fighting and helping people on the back end that have the experience, and you have so much to give. So I'm going to leave your information below. And with that, if you like this video, hit the like button and certainly hit the subscribe button. And I hope to see you on the next video. And Arlena, thank you.
Thank you, Troy.
All right. Bye.
Bye.